Christopher Mertlitz, you are Head of European Investments at WP Carey. Thank you for joining us on BiTV.
Thank you very much for having me.
In a blog post following MIPIM, which took place in Cannes mid-March, you identified interest rates and inflation as some of the main talking points among investors during that week. How do you see these subject interest rates and inflation affecting property markets in the coming months, and maybe also affecting WP Carey's investment strategy going forward?
Sure. Those certainly, I agree, were the two of the key topics that everyone talked about at MIPIM. And inflation, maybe let's separate them first. Inflation in itself is for us something that we prepare for, that we work with in our leases. And the premise of our investment model is to provide our investors with inflation protected income. So when we structure transactions, we strive for regular, annual, ideally, CPI-based rent increases in our projects. So from how are we looking at inflation, how we prepared for inflation, I think it is core to our business model to account for that already in our underwriting and to account for it in how we structure and price deals. So are we afraid of inflation? Not really. But certainly we're seeing a period of heightened inflation because of certain macroeconomic events, energy shortages, supply chain issues. So there's a lot going on out there that would lead to what hopefully will be a more of a temporary spike in inflation. But overall, does it change our investment strategy? Does it really make us look differently at what we do? I'd say the answer here is very much no. It is something that we account for in our business, and WP Carey has been around for close to 50 years. And we've seen periods of high inflation, we've seen periods of low inflation, and it's something that we work with on a day-to-day basis anyhow. I think more interesting is what we are seeing right now with interest rates. And partially the increase in interest rates is driven by central banks trying to combat in a way or trying to counter the inflation levels that are going up. And yes, I would say from an investor perspective, we are an all equity investor, so we don't really need bank financing when we acquire. And in fact, we don't want bank financing. We buy everything all equity. But still, when we underwrite a deal, we need to be aware of what the market financing conditions are and how bond rates are changing and how general market financing conditions are changing. So I think at the moment we are seeing a bit of a change in the paradigm we've seen for the last 10 years. Continuous and annual decreases in cap rates and in yields for properties. We might have now reached a bit of a point where we see an inflection here, and for certain products and even long income projects where we would see yields to go up again slightly as a consequence of rising interest rates. So I think that is already happening, and depending on how far rates will climb, that will have an impact on pricing. And last sentence I'm going to say here is that as an investor at WP Carey and as a REIT, we are a spread-based business. It's a spread over our cost of capital. And clearly, this is for the entire real estate industry as a whole, not just our specific. Investors will need to reconsider how they price deals in the ongoing rising rate environment. So yeah, there will be changes, and it certainly is going to stay very exciting how interest rates will move forward over the next few years and months in particular.
Okay, if we stay on the transforming the transformation subject, another very important topic at MIPIM was the increasing importance of ESG for real estate investors. How does WP Carey address these issues in its strategy?
Sure. So we really, as a company, work closely with our tenants to make sure that we can be there for the needs of our tenants as far as they would like to invest in ESG measures. And we're actively approaching our tenant partners to make sure that they know we're here and we can provide capital for installing solar panels on the roofs. And in fact, one of the largest European roof installed solar installations is on one of our buildings in the so-called Maasvlakte in for all the Dutch people out there, apologies for my bad pronunciation, in the Port of Rotterdam in the Netherlands. And so we do that quite a lot. And it's certainly from a bigger picture perspective, we want to make sure that we can help our tenants to get the best out of the properties. And it's becoming more and more important also from every corporate angle and from our tenants as well, to make sure that they are helping to be better corporate citizens, but also from a real estate perspective, to make sure that their buildings are equipped and future-proof and laid out in a way and set up in a way that they minimize their ecological impact. So it's becoming a really, really big point, and rightfully so, and something that will only increase in importance going forward. I think ESG, if you go back 3, 4, 5 years, it would have been maybe only for some investors and a real active consideration. Right now, I don't know an investor that wouldn't very closely look at ESG considerations in any investment. So it is core of our strategy as well.
Okay. Speaking of your strategy, in France, you have been active last year on the sell and leaseback front with a 102 million euros sell and leaseback acquisition of 3 casino hypermarkets. Obviously, Businessimo is a French media group, so I have to ask, how do you assess the French market at the moment, and maybe how does it fit in your strategy?
Sure. So and one of the beauties of the business model of this sale and leaseback and the net lease investment model is that it is very transportable, very portable between countries. So when we look at our core investment regions, Europe and North America, we really go where the opportunities are. So we have the freedom to choose between countries and geographies and locations, because we go where the projects are. We don't really set off with a certain predetermined country allocation, because that wouldn't really work. You want to go where the projects are, and then the resulting portfolio allocation is a consequence of that. Looking at the French market specifically, there's a few things that make it somewhat unique in a European context. One would be this notion that you can't have a lease longer than 12 years. It's not true. You can have a much longer lease. All it means is that it needs to be registered, and there will be some cost involved with that. But the cost in the grand scheme of things is not that material. But I always find it surprising when working in the French market, how many people have this preconceived notion that it's impossible to have a lease term longer than 12 years. It's simply not true. And we find opportunities where those structures are possible, where it can go longer than that. And other than that, it's a market that we like a lot, and we have been working and investing in France for many, many years. And in fact, the very first European office of WP Carey, now we're based in London, but the very first office was actually based in Paris. So it was kind of the first country we invested in outside of our domestic US market. And therefore, we look closely at France. We continuously look at transactions there. And we would certainly want to do more, and we're open for business in France. But the key challenge from a net lease long income investor perspective in France is very much lease term. And this preconceived idea that you can't have a longer lease than 12. You can. And many investments rightfully deserve a longer lease term than 12.
Okay. Thank you very much, Christopher Mertlitz, for your time, for your insight. Thank you all for joining us, and see you soon on BiTV.
Thank you so much.